Hello and welcome. Today, we're going to download stock price data to perform basic calculations pertaining to the date and count functions. We'll use arithmetic to calculate the return of the stock over a specified time period. We'll work with summary statistic functions to calculate average returns, logical functions, if, and, or, and we'll conclude with a scenario where we're going to put ourselves back in time to January 1st, 2002, and pretend we invested $5,000 in the stock and continued to reinvest another $5,000 each year to calculate what our portfolio would be worth now and how much of that came from a return. We're going to use or calculate all of this using Apple stock price data, which I'm going to download from kaggle.com, which is a community of data scientists, and they have open data which you can freely download. I'm going to download this Apple stock data to my computer. I already have it saved in my downloads folder, so I'll open up this Apple stock data now. When I open it, I have this workbook here that has the data I just downloaded from the internet, as well as the workbook with the questions in it. I want these actually to form part of the same workbook. So I'm going to copy or move this entire worksheet into the workbook that it is overlaid on top of. The way I'm going to do this is by right-clicking on the worksheet, click Move or Copy, and it's telling me where do I want to move it to. Right now, this is the same workbook that I have opened. I want it in my other workbook, though, the one I've labeled Apple Stock without the underscore. And I'm going to move it right behind the stock questions worksheet. So this one, I want it positioned right behind it. So I'll click Move to End and I'll click OK. Now these will form part of the same workbook with two tabs, one with the questions and one with the data. Notice right away with this data that there are some problems. Notice how some of the numbers are positioned near the right-hand side of the cell, while other numbers are positioned on the left-hand side of the cell. This brings us to an issue that is you're commonly faced with when you download data from third parties, either from a system somewhere or from the internet, in that Excel may not recognize cells as you hope that they will. Notice how when I select these cells that are left aligned, it gives me the count in the bottom right. I've selected 17 cells. However, notice when I select the cells that are right aligned, I get more. I get the count, but I also get summary statistics, the average and the count. When strings or text are entered into the cell, by default, they will be left aligned, meaning they're going to hug the left-hand side of the cell. And you can see when I typed string or text here into L3, it is left aligned by default. This is different than if I type numbers. If I type numbers into the cell, by default, they're going to hug or be aligned on the right-hand side. So string or text, left-hand side by default, numbers, right-hand side by default. That doesn't mean we can't change it. Of course, you can align them in the center if you want in both of them, but on entry, by default, numbers will be right aligned and text will be left aligned. So what this is actually doing is it's treating these numbers as text. That means I can't do some functions on it because it doesn't recognize these as numbers. So that's a little bit of a problem, or it can be a problem. We can actually see the problem quite clearly because it gives us this triangle in the top left-hand side of the cell. And when I go to the warning, it says the number is stored as text. And I have this here, like convert it to a number, which I can do, and I get rid of that. But it would not be time feasible for us to do this with every single number, convert it to a number like this. There's got to be a better way, and there is. What I'm going to do is just select the entire column. So select B2 and Control Shift down on my keyboard. With the entire column selected, I'm going to go to Data on the ribbon, and I'm going to say Text to Columns. What this is going to do is convert everything in this as a number to get rid of those arrows, or I'm sorry, triangles that are in the top left. Now everything is being recognized in this column as a number, which is what I hope. When we're doing backwards analysis on stock price data, we want the adjusted close column. The adjusted close column is the stock price, but retroactively like adjusted to reflect any stock splits or dividend payments that have happened in the past. So what I'll do right away maybe is just get rid of these columns that we won't be using. Click on column C, drag all the way over to column G, right click and delete. We're going to be performing all of our calculations on this adjusted close column. One more comment here for those of you unfamiliar or uncomfortable with finance data. We are not going to be going into too much detail here. All we really need to know, if you have a long position in a stock, meaning that you are a buy and hold investor, the higher the stock price, the better it is. So ultimately, if you have a long position, you want the stock to go up over a long period of time. Buy low, sell high. With that said, let's go look at our stock questions. There are 12 questions thematically grouped among 5 different parts, each of which is going to be developing or practicing a different skill set. What we will do is go through this one part at a time. Now, because my brain is too small to toggle back and forth between these two tabs, what I'm going to do is copy and paste the questions from each part over to the other tab because it has the data we're working with, and I can focus on a smaller subset of these questions one at a time. So we'll begin with question 1 and 2. I'll copy and paste this over here. The first question is, how many days between the first day and the last day of the data set? Now I can look at this and I can see the first day is obviously December 12th, 1980. The last day, hitting Control down on my keyboard, is January 3rd, 2025. So there's approximately 11,107 rows of data. And I know because this begins in row number 2, the data set. Control up to go back to where we were. Now, how many days are between that? If I were to select the column, I get my summary stats in the bottom right, and I can see the count is 11,107. But that's not the number of days between them, because stocks, they don't trade on the weekends in holidays. And we can see, probably observe in the first few rows or records here what's going on. There's December 12th, 1980, but not the 13th and the 14th. And then there's the 15th, 16th, 17th, 18th, 19th. So a complete week here. So presumably December 12th is a Friday. In fact, I can probably check this out pretty quickly. I'm going to put in a column here called day of week, and I'm going to go text this, the date, and then format as day. And see. So this was a Friday, December 12th, 1980. And I can zippity-doo-dah this all the way down, and I get which day of the week it was. So I want to know the number of days between the data, the first day and the last day, inclusive of weekends and holidays. I can't simply just count the number of rows or records that exist. And the count is, again, 11,107. So I need something different. Now, I need to answer this somewhere, and I'm going to answer all of these 12 questions kind of above the data. So I'm going to insert a couple of rows here to provide me with the space I need to answer these questions. So I'm going to click and drag down. I don't know how many rows I need. I'll say maybe 14 to start with. So click and drag down here. And I'll cut and paste these questions up here. So if I want to count the number of days there are data for, I already know that. That's question number 2. That is the 11,107. But maybe let's begin with Q2. I want to answer this using a formula, days of data. Now, I have the choice here on what I can do. There's 3 columns worth of data right now. I have the date, the adjusted close, which is the stock price, adjusted stock price for any given day. And then I have the day of the week of that date, Monday, Tuesday, Wednesday, Thursday, or Friday. But I have 3 columns to choose from. If I were to select this column, column C, control down, I can see in my selection there's 11,100 rows worth of data. Alternatively, and this is this column here contains like string or text. Notice how it is left aligned by default. These other 2 columns, notice that they are right aligned by default, which means that they're numeric values. And when I select them, I get more than the count. I get the sum and the average. This, by the way, can be customized on how it's presented. By default, you'll get average, count, and sum. We'll get into that later. Not in this video, but in a future date. Okay, so we have 3 columns worth of data, and I want to count the number of days there are data for. I want the 11,107 to appear here in B3. Now I have choices. I could say count equals count, and I could pass it column A or B, and I would get the correct value. However, I cannot pass it column C. And I'll start here by doing column number A. And I'll select B16, Control Shift and down, and then close out my bracket and press enter. And I get the 11,107 that I was expecting. However, this formula will not work if I'm trying to count my string values. I get this 0 right here. It works for column A, but it does not work for column C. The reason is because the count function counts the numeric values that exist within a column, or within an array of data, I should say. And because column C contains string values, it's counting 0 of them. If I wanted to count the string or text values, I would need to use count A. And now I can pass it the same data set, same range, and I get the 11,107. So this is the number of days with which there are data for, 11,107. But that's not what Q1 was. Q1 was how many days are between the first and the last day of data. So let me cut and paste this down a little bit. I'll answer Q1 up here. Oops. Now to do this, we can, there's multiple approaches in which we can do. But the first thing is to recognize I have this count function here. This count is counting the date column. Again, notice that the dates are right aligned here. They're right aligned, they hug the right-hand side of the cell by default, and again, that contrasts with string values that by default hug the left-hand side of the cell. They're left aligned by default. But because here, these string values, or I'm sorry, these dates are right aligned, they are actually numeric values. Numeric values, all kind of fixed according to January 1st, 1900. If I were to type January 1st, 1900, Excel is going to recognize this as a date. January 1, 00, 1900, 0101. If I change the formatting of this just to say general, I get date number 1. Dates are actually just numbers relative to January 1st, 1900. So if I change the formatting or presentation of these dates over here from a date to general, no specific format, we get 29,567, 29,570. These are the number of days that have passed from day number 1, which is January 1st, 1900. So because these are numbers and Excel just presents them as dates in a convenient format for us, it allows us to do calculations. Let me take the first day of data here. I'll say first day. Oops. The first day is December 12th, 1980. And the last day is the very last day in the data set, which is January, looks like 3rd, 2025. And again, these are dates that are presented as dates for us to be convenient, but they're actually the number of days that have passed from January 1st, 1900, which is day number 1. So if I want to know the number of days between the first day and the last day, I can actually do some arithmetic on this. I can just say days between, and just say this day, the newest day, minus the oldest day, and I get 16,093. That's the number of days that have passed between this. Now let me go back and reformat these as dates. So that's Q1 and Q2. We have how many days are there between the first day and the last day of the data set. We need to recognize that dates are actually just numbers, which allows us to do calculations like we can with a regular formula. Q2, number of trading days there are, it would be the count A function if we're using text data, or the count function if we're applying it to numeric data. Let's move forward to part number 2. In part 2, there are 2 questions, both of which pertain to performance or return measured on a percentage basis of the stock over the time period. I'm going to copy Q3 and Q4 and paste it over Q1 and Q2 on our Apple Stock tab. Q3 pertains to the total return of the stock over the time period. Now, I was always taught the percentage change is equal to the amount of change divided by a base amount. Now, the amount of change is just the newest value minus the oldest value, and the base amount is simply the oldest value. Now, what we can do is apply this formula by referencing specific cells within our data set. So being mindful of order of operations, the newest value is going to be the January 3rd, 2025 value, I believe. So I'm going to hit Control down on my keyboard twice to get there. Minus the oldest value, which I believe is the December 12th, 1980 value. And notice when I'm navigating vertically, I'm losing the data I'm working with as well as the column headers. So what I'm going to do is freeze my panes once I'm done with my formula. And I'm going to divide that by the oldest value, December 12th, 1980. Press enter. And I get a whopping 246,000% over that time period. But like I said, when I initially typed that formula in, for example, to get my newest value, when I scroll down, I lose my column headers as well as where I'm putting the cell or the formula. So I'm going to freeze my panes. Essentially, I want these column headers to always be visible no matter where I am on the spreadsheet. To do that, I'm going to click on cell A17, and I'm going to go to View on the ribbon, Freeze Panes, and then Freeze Panes. And what that will do is freeze everything that precedes my selection. So since row 16 precedes row 17, it will always be visible no matter where I am. And now if I scroll up and down, or to the very bottom, I always see both my column headers and where I'm putting the formula. So I'm going to put that formula in again. My newest value is this January 3rd, 2025, minus my oldest value, which is December 12th, 1980, divided by December 12th, 1980. And I get that same percentage. Now, this formula is returning the correct value. However, there is a weakness in the way it's structured. The weakness is that if this were a connection to live data and new dates were being added, and let's suppose on September 20th, the stock price was 600, my percentage change value did not increase accordingly because I manually referenced specific cells. Is there a way to structure this such that if our stock price data was a live connection to real data, meaning that it would update automatically every day with the new stock price, can we structure it so that our total return calculation will return and update accordingly? The answer is yes. In order to do that, though, what I'm actually going to do is restructure my response to question number 1. Here we have our first day of data, and we're specifically referencing A17. Similarly, we have our last day of data, and we're specifically referencing cell A11,123. which means that if I did have the September 20th or whatever date stock price, my last day of data is not recognizing it. I'm going to restructure this so that I'm not manually referencing both the first day and the last day. Instead, what I'm going to do is use formulas. Now remember, dates are simply just numbers. They're just presented as dates for convenience for us. However, they're all relative to that January 1st, 1900 day, which means that I can apply a formula to dates. So what I'm going to do is I'm going to type equals min and pass it all of the dates in this range. And I get that same December 12th, 1980 date. For the last day, I'm going to use the max function. I'm going to pass it to the exact same range. And I get January 3rd, 2025, because this is the last day of data. This December 3rd, 2025 is the biggest value that exists because these are the number of days that have passed since January 1st, 1900. So if a new date were to be added, September 5th, 2025, it will now recognize this as the last day because this September 5th is greater than January 3rd, 2025. Now what I can do is add a column called stock price next to Q1. And what I'm going to do is use a lookup function in order to pull in what the stock price was on those days. So I'm going to use a VLOOKUP, which is what we've been using. I'm going to look for December 12th, 1980, and I'm going to pass it all of this data here. A17 to B1,048,576. I want the second column. Oh, I'm sorry. I forgot the lookup value. Equals VLOOKUP. Look for December 12th, 1980. Look for it in A17 to B, what will be 1,048,000. When you find it, give me the value in the second row, and I'm going to use an exact match for now. And I get 9.8 cents, which will be the 9.8 cents right here. I want to copy and paste this vertically, and I'm going to have to make my row references here absolute because I can't go beyond the maximum number of rows for the spreadsheet. Copy and paste it, and here I get the stock price on January 3rd, 2025 at 243.86, and let's validate this by going to the bottom, and I can see on January 3rd, 2025, it was this 243.86. So here I have the last day and the first day. Now I want the total return. My new value is this 243. My old value is the 9 cents. That will give me the amount of change. And now the base amount is this last day of data. And I get that same 246,000%. But because we did the min and the max to pull in the date, and then we layered on a lookup function based on both of these, all of these formulas are dynamic, meaning that if it were live data and we did have new data that was added, I'm going to say 600 here. As soon as I press enter, the 600 will pass up to my last day and my total return calculation updated accordingly. If I delete these, as soon as I press delete, my last day will be January 3rd, 2025, and my stock price on that day was 243.86. So I'll delete these and I go back to where I was. But because we structured these as dynamic, our total return calculation will always be dynamic as well. So this is Q3 total return. Let's move forward with Q4, which is the compound annual growth rate. Now, the compound annual growth rate reconciles the beginning amount and the ending amount by applying a uniform growth percentage to those two. It is essentially the per year average. We can't simply take the total return and divide it by the number of years because that doesn't factor in compounding. The formula for compound annual growth rate is equal to future value divided by present value to the power of 1 over n minus 1, n meaning the number of time periods. In this context, future value might be a little bit misleading because all of these dates are in the past, but that just means the ending value. And the present value, PV, is what your starting value is. Now, what is the compound annual growth rate from January 1st, 1981 to December 31st, 2024? To do this, I'll structure it in a similar way to the way in which we answered Q1. I'll just manually type those two dates in to begin with. January 1st, 1981 and December 31st, 2024. And what we did a moment ago is we used a lookup function to pull in the stock price. We used a lookup function to pull in the stock price on December 12th, 1980, and the stock price on January 3rd, 2025. Presumably, I can copy and paste this vertically, and I'll get the stock price on these two dates. However, the way I've structured it, it will work for one of the two of these. I get an error on January 1st, 1981, but it does work for December 31st, 2024. Why? Let's look at these two numbers. Because I'm already down in row 11,000 approximately, we'll examine December 31st, 2024, because it's just right here. So this is what we're saying with our vertical lookup. We're saying look for December 31st, 2024. Look for it in columns A and B. When you find it, return column number 2 of the table array. So it's finding this number and returning it for us up here. So all is good and well. However, we got that error for January 1st, 1981. Let's go and try and find that day. We have December 31st, 1980, and then January 2nd, 1981. We do not have January 1st, 1981. Remember, stocks don't trade on weekends and holidays. So the stock price on this day doesn't exist. So what can we do? In fact, what we can do is change it from an exact match to an approximate match lookup. And all of a sudden, I get a number. Now let's try to figure out which number this is returning. We had December 31st, 1980, and January 2nd, 1981. It's returning 11.731 cents, which is this December 31st value. Now, why is it doing that and not the January 2nd? Let's look at how approximate match lookups work in our other tab. To do this, I'm just going to structure a sequence of numbers here, and in the corresponding column, I'll put random words. Let me just zoom in here so that it will benefit the recording. Random words are going here to help illustrate VLOOKUP. All right, so I have a sequence of numbers in my left column, which would be column 1, and I have a value associated with that number in column 2. Now suppose I wanted somebody to type a number in here and return the associated column over here. So 22. So I'm going to say find 22, find it in this table array, return the second column, and we'll start with the exact match lookup because this is what we've been working with so far. And it can find VLOOKUP. It can find 22 here because it exists in column number 1 of our table array. And I can type any number that exists in our table array and it will work. If I type 11, for example, as soon as I press enter, it's going to change from VLOOKUP to 2. Or if I type 5, it's going to change from 2 to R. However, if I type a number that doesn't exist, 16, I get an error. Now, what happens if I change this from an exact match to an approximate match? True. All of a sudden, it returns a value, and that value is help, which is pretty close to 15. So it's returning this one. But let's see how this works. If I type the number 4, what will it choose? Will it choose words, which is next to 3, or R, which is next to 5? It will actually go to words. Words. The way that the approximate match lookup works is it first looks for the number for an exact match. If it can't find it, it goes until it finds the first number that is bigger than the number you're looking for. So it starts at 1, going top to bottom. Is this 4? No. Is it bigger than 4? No. So it goes down. Is this 4? No. Is it bigger than 4? So it goes down. Is this 4? No. Is it bigger than 4? Yes. Oh, it's bigger. Let's go back up to the previous row and then over. Similarly, if I type 10, there's 9 and 11. 10 is right between them. As soon as I press enter, it will return here. It goes until it finds either 10 or the first number bigger than 10, goes to the previous row, and then over to return here. If I type 14, for example, which is really close to 15, it's only 1 away from 15. Despite that, it will return the 2 associated with 11 because it finds the first number bigger than 14, previous row, and over. 2. So that's how this approximate match is working. But now we have what our future value is and our present value. We need the number of years as well, the n. Now, we can just do, these are complete years here from 1981 to December 31st, 2024, which I believe is 44 years. Or we could outsource the calculation. There's a year frac function, it's called, that will give you to the decimal value the percentage of years, the number of years to a decimal place that exists between two dates. So year frac, start date, end date, and then the basis depends on your assumption. Do you want a 360 or 365 calendar year? These actual/360 don't factor in leap years. The actual does, so we'll use that one. And I get 43.99 years here. So the compound annual growth rate is, I lost my formula for it. I don't remember where I put it. I'll just retype it here. CAGR equals my future value divided by present value to the power of 1 divided by n. I don't know what happened to it. I don't remember deleting it. But anyway, it doesn't matter. So my future value is the newest value I have divided by my present value, the oldest value I have, to the power of 1 divided by, and I do have 43.997 here. I'm just going to manually type in 44 because I know there are 44 complete years, and then do subtract 1. And I get 19.3%. Now, there are built-in functions that exist in Excel that would allow us to calculate that. In this case, the future value function, the rate function, which we'll get into in a few weeks. But for now, there are ways that we can check this, and checking with the rate function should yield the same result. But there are more manual ways in which we can validate whether or not this number is correct. Compound annual growth rate reconciles the ending amount with the beginning amount, and we have both of those. The beginning amount, 11 cents, which is this value here, and the ending amount is this $2.50 and 41 cents, or 42, I should say, which is this amount here. Let's validate whether or not this number is correct. And I'm going to have like a CAGR check, I'll call it. And in here, I'll just put what the CAGR was, so I don't have to toggle back and forth between our tabs. compound annual growth rate we're saying was 19%, and the beginning value was this 11.7 cents. And the year stock price. In fact, I'm going to use this as an opportunity to show you a couple of new functions. The year was 1981, so I'll just type 1981. But the exact day was this January 1st, 1981. I'll say date. No, sorry, I won't do that. I'll save that for later. So essentially, we have what the stock price was on January 1st, 1981. And then it averaged per year this 19%. So I'm going to take this beginning value and just multiply it by 1 plus the growth rate. So at the end of the year, it was not 13.9 cents, but what I'm trying to get at here is once I get all the way, that times 1 plus the growth rate. And I'm going to put F4 on that. And if I copy and paste this all the way down until I get to the end of 2024, which should be somewhere around right here, 2024, I get 250 and 42 cents, which should be what it actually ended at. So it started at 11.7 cents, which is what I'm saying the beginning value was. I applied just a 19% growth rate to the previous value. And over that time period, I should get to what the ending value was. Now, the stock price surely did not appreciate in a uniform fashion like this. What this function does, compound annual growth rate, it gives you a per year average over that number of years by reconciling the beginning amount with the ending amount. And again, it didn't appreciate uniformly. There would have been variations year over year, and surely it would have gone down certain years, but this is just a per year average on what it did. So that's cue number 4, compound annual growth rate. Let's now move forward to part number 3. In part 3, there are 4 questions pertaining to summary statistics related to the stock price. So I'll copy and paste them into our Apple Stock tab now. Q5 is what is the range of prices over the past year? Now I'm kind of running out of space in order to answer these. So in fact, what I'll do is copy and paste them, or cut and paste, sorry, a little bit further to the right, and I'll do Q5 range. What is the range of prices highest minus lowest value? And this is basically all time. So what I'll do here is structure this in a way that will allow us to be dynamic for if this were live data, meaning that if new data were being added. In fact, we've already done this right here with the minimum pertaining to the date column. What I can do is go to the formula bar and copy and paste that formula right here. And I get 29,567, which would be the serial for the date. That's going to be the first day of data. Here I'll do min. I don't want to apply this function, though, to the date column. I want to apply it to the adjusted close column. So what I can do is just double click on the formula and drag my column over to the adjusted close, and I get the minimum stock price, which is going to be 37 cents. And I can do the same thing with the maximum, copy, paste, and then I get a date, a serial, but I don't want to apply this to column A. I want to apply it to column B, and I get the max. Now, this is the minimum and the maximum, and in fact, if I were to apply filters to this, I can double check that is in fact the minimum and the maximum. Applying the filters, if I go to the adjusted close column now, it will put every unique value in chronological order for me. So I have 0.37 cents, which would be the minimum here. And then if I scroll to the bottom of this, I would get 259.0199, which would be this 259.02. It's just rounding it here for me. I could show more decimal places here if I want. There we go. So the minimum and the maximum. This is like all time. Now suppose I'm taking Q5 a little bit further and I wanted to know like the date that these happened on. What we've been doing so far is VLOOKUP functions in order to pull in for us the stock price based on date. Now I want the date based on stock price. The question didn't ask for this. However, it's a good opportunity for us to practice a new or existing skill. So let's suppose I wanted to know like the date that this happened on. We have the stock price and I'll say range all time. What I can do is something similar. VLOOKUP only works left to right, meaning that there's a couple of ways that I can go about this. Here I'm going to put date helper, and I'm just going to say equals to the date over here. And maybe I'll reformat these ones as dates just to make it clear. Date. If I wanted to do this with a VLOOKUP, I essentially have to have a helper column. And I'm going to say, look for this. My lookup value becomes the stock price now. My table array is this adjusted close column. I'm going to say, look in this. This becomes column 1. I want column not 2, but 3. And I'll do an exact match lookup. And I get a value of 0 just because I haven't populated my date helper column yet. But I'll just paste that down. And the date here, we'll see, is July 8th, 1982. July 8th, 1982. So if I filter for this, go down to 1982 in my list, July 8th, I have a value of 37 cents. And that's what this is, July 8th, 1982. So if I wanted to use a VLOOKUP, I essentially have to have a helper column because VLOOKUP works left to right. I can't go right to left, which is a weakness of the VLOOKUP formula. But there's an alternative approach that we could do. I know that the answer now is July 8th, 1982. And I validated that. I could actually have gone about that a different way and just shown me what the minimum is. My filter, I get July 8th, 1982 here, a Thursday. But what I'm going to do is delete my date helper column. And I'm going to delete this date here. I'm going to accomplish this same thing with an X lookup equals X lookup. I'm going to say, look for this stock price. Look for the stock price in the adjusted close column. When you find it, return the value in column A that is in the same row. And I get that July 8th, 1982. And I'll just copy and paste this down one row to get the date associated with the maximum, the 259, December 26th, 2024. And we don't need to apply filters to find this. It's right here. Okay, so let's Q5, the range all time. Let's move on to Q6. Q6, range past year. For Q6, we want the range in the past year. So we do want the minimum and the maximum. However, we have now conditions or criteria associated with it. And there's more than one way of going about it. And you know what? I'll do, for completeness, I'll do both. The first one will be I'm going to delete these formulas here because I'm kind of getting in the way of myself. What is the range of prices over the past year? Now, we have data that goes, we only have 2 data points in 2025. So I'm going to say the past year is essentially 2024. So this will be one way of going about it. Now, and again, if this is my approach, I can have actually more than one way of going about this. But one way could be by adding another helper column and adding in a helper column called year. And I'm going to pass it the year function here. And this will isolate the year associated with every single date. So now what I can do is use that to my advantage. And I can say min ifs. And I have a minimum range. This is my numeric column here. Then I have a criteria range 1. This is what I want to filter for. So I'm going to filter by year. I'm going to filter for the year 2024. And my next column here, my next function is like the max over the past year. So it's simply just changing min to max. And I have over the past year, at least in 2024, it's been 164 and 259. And again, we can validate that with filters. So I'm going to turn my filters off for a moment, go back and select the data and turn them back on. Now what I'll do is select only values in 2024. And I can see here the minimum is 164.40, which is what's showing as my minimum. And the maximum is 259.01.999, which is this 259 that we see right here. So that's the minimum over the past year, but there's more ways that we can go about it. As an alternative, what I could say is something like, well, I'm going to copy and paste this. If I wanted this to be a little bit more dynamic, meaning that I have a function like equals today. Today is September 15th, 2025. That's when this video is being recorded. And now I can say like something edate, my start date, minus 12. And now I have, if I format this as a date, every time I open up this spreadsheet, I'll have these 2 dates here. This will update every day. It'll be basically a rolling 12 months. So now what I can say is equals min ifs, the same formula. And I can say my minimum range, this is my numeric column. And I can go all the way to the bottom if I want, if this were live data. However, I'll just select the data here. I'll say my criteria range is the date. And it has to be greater than or equal to this one now from 12 months ago. And that will give me from 12 months ago what my minimum value is. And then I can copy and paste this and just change min to max. And I get that 259 as my maximum over the past year. Now, why are these different? This one encompasses all of 2024. However, this one is just from September 15th, 2024 and onward. So these are a little bit different. This one to the right that's highlighted now is dynamic. Every time I open the spreadsheet, this will update to whatever today is. And then I'm subtracting 12 months from that day to get 1 year ago. This one I hard coded in to be equal to 2024 only. So 2 different approaches depending on what your need is. All right, so that's Q5 and Q6. Q7 is what is the average closing price of each year? And I'm going to have to move my questions out of the way a little bit. I'm running out of space to answer these. Q7. What is the average closing price of each year? Now, I have basically 44 years of data. In fact, I'm going to have to answer this on a different tab. Q7. average price. Now, this isn't really a useful statistic for us other than practicing the average function. Now, when I select a numeric column, I get summary statistics in the bottom right. So the average globally is 23.5. However, I want subsets of these. I want an average by year. So what I can do is I can copy and paste my year column over here. And then I can remove my duplicate values. "46 values remain. And then it becomes an average if function. Average if. So range here, this is what do I want to filter for? I want to filter for the year column. In the cell I'm putting this formula now, I want the average associated with 1980. So I select the cell that contains the value 1980, and then I go to what I want to average together. I want to average together the stock price. So in 1980, the stock price on average was 10.465 cents. And we can validate that pretty quickly. If I just apply a filter to 1980 and then select all of the values in this adjusted close column, I can see the average in the bottom right-hand side of my screen is 10.465 cents. But I want my formula now, like measure twice, cut once. I want to be able to paste this formula vertically. So I need my references that are like the underlying data is not moving, yet my formula is going to be moving. So I'm just going to put references in the rows to the underlying data. And now I can paste this vertically, and I have the average price by year. And if we want, we could plot this quite quickly, insert, just do a recommended chart. And sure. So we have the average price by year now. Let's Q7. Let's Q8. What is the average return on Mondays versus Fridays? So this one is a little bit different. We already inserted a day of the week based on the date here. And now I want to know, like, what is the day over day percentage change? So what I'm going to do is add in, or no, I'll do dollar change, sorry. Or no, percent change. A day over day percent change. We know the percent change, again, I'll retype it here, is equal to new minus old, the amount of change, divided by a base, which is the old amount. If I want the day over day percent change, I'm going to go, my new amount here is today's value, minus yesterday's value, divided by yesterday's value. So from December 15th, the Monday, it decreased 5% from the previous day. They're both 9 cents. One is just 9.8 cents down to 9.3 cents. So it decreased 5% day over day. I'm going to copy and paste this formula vertically so we have the entire data set covered. So now we have this percent change column that's added to our data. Now I want to know, like, what is the average return versus Mondays and Fridays? So to answer that, I'll add in a new tab. I'll call it Q8. And this time I'll do like a day of the week column instead of date. And I'll do Monday, Tuesday, Wednesday, Thursday, and Friday. If I don't like typing that in, I could do equals unique and pass it my day of the week column. And I get a day of the week, Friday, Monday, but I don't mind typing only 5 rows of data. So now what I need to do is apply an average if function, not by date, but that day of the week column. So equals average if, Range is what do I want to filter for? I want to filter for Mondays. Where can I find Monday in the data? It's this day of the week column. So I lock that in with a comma, and now it's saying like, what is the criteria? I want to filter in this specific cell for Mondays. When I find Mondays, what do I want to average together? The percentage change column. And on Mondays, the stock has returned on average 0.1% day over day. Now, if I want to paste this vertically up and down, my underlying data isn't moving, so I have to lock in my row references to the underlying data, the one that exists in the Apple Stock tab. And once I do that, all I need to do is copy and paste vertically average return. So on average, Wednesdays have been outperforming every other day. Fridays is negative, and Mondays is positive. Now, this is not indicative. Hopefully, you know this about stock prices. This is not indicative. This pattern will hold in the future. However, this is what this has averaged over the 44 or 46 years of the stock. So that's cue number 8. What is the average return on Mondays versus Fridays? Let's move on now to part number 4. There are 2 questions in part 4. The first of which is on how many days did the stock increase, did the stock go up, versus decrease, did the stock go down? Let me copy and paste these 2 questions into our Apple Stock tab. Question 9, calculating the number of days the stock went up versus the days the stock went down, is essentially asking for a subset of a calculation we did in Q2. In Q2, we calculated the days of data, the number of days for which data exists. And we did 1980 all the way down to 2025 and concluded that there were 11,107 days worth of data. Now I want to split this between days where the stock price went up and the stock price went down. To do that, we can reuse the calculation we previously created. We calculated the percentage change column here, which calculates the day over day percentage change. When this value is negative, the stock went down from the previous day. If this number is positive, the stock price went up. So basically, we can add a condition to our count to look for the criteria whether or not this number is positive or negative. Let me structure Q9 roughly around L2. And I'll say days increased and days decreased. And what I want here is to know the number of days. And I don't want the count. The count will count all numeric values that exist in a range. I want to add a condition to that, so I need the count if. Here, I'll pass it my column E, and I'll say look for values that are greater than 0. And I'm going to put greater than 0 in quotations. And it tells me that there are 5,544 days. I'll repeat that procedure now, and just to change the greater than to a less than sign. So less than 0, and I get 5,191 days for a total of 10,735 days. Now in Q2, we calculated there to be 11,107. This number is off by, looks like about 400 days. So what is going on here? They should be able to reconcile these 2 numbers here. If I look at this, I have a greater than 0 for the days increased. And on this one, I have a less than 0 for the days it's decreased. I haven't captured the days that it is exactly 0. So I'll just write days 0 here. And I'm going to do a count if and give it the same range and say days that it is exactly equal to 0, with the 0 a numeric value not being in quotations. Press enter. And I have 371 days here where it was exactly 0. This produces a total amongst those 3 of 11,106 days, which is 1 less than the day's worth of data, because over here our counts are not going to be capturing the first row of data. Here, we're calculating the day over day change, which is not possible for us to do on the first day. But what I'm going to do actually is embed the days 0 directly into our days increased by saying days that it is greater than or equal to 0. I get this 11,106. So that's Q9. Q10 is what percentage of days were increases versus decreases. So it's basically turning this into a percentage where we have an amount divided by a base. And I can copy and paste this down and sum accordingly. And this is Q9 and Q10. But before we move on, it's worthy of us to notice what is going on here. Take note that 53% of the time, Apple stock went up. In 47% of the time, Apple stock went down. When you buy a great business, you want to take a long position, meaning that you want to have a buy and hold strategy. The reality is, on many days, in this case, roughly half the time, it's red. And that's true of a lot of stocks. On a lot of stocks, half the time you're holding it, the stock is going to go down. That's normal. Volatility isn't a bug. It's essentially the price of admission. A buy and hold strategy lets time do all the heavy lifting for you. Selling on a dip turns a temporary decline into a permanent mistake. Holding, especially when your thesis is intact, is how you capture the upside that most people can miss. The edge isn't needing to time every single tick. It's owning quality and letting compounding do the work for you. Down weeks will test your patience. Up weeks will reward your discipline. So commit to the plan, whatever your investment philosophy is. Own what you believe in and ignore the noise. Focus on progress, and give time to allow your winners to be great. That's the power of a long position and why buy and hold can produce handsome returns over long periods of time. Remember, overall, over this 46-year period, the stock price appreciated, included the total return, meaning with dividends reinvested, 246,000%, which equated into a per year annual average of 20% mouth-watering returns. These returns are true and real despite almost half the time, 47% of the time, the stock price going down. Let's move on now to the final component, Q12. And put ourselves in the position. We're going to go back in time to January 1st, 2002. We're just going to tell ourselves we are going to invest. Whoops, I'm sorry, folks. I'm going to copy that again and paste it here and delete that. We're going to go back in time and put ourselves in the position of January 1st, 2002. We're going to invest $5,000 in the stock. We're going to invest another $5,000 on January 1st of each following year. I want to know what our portfolio would be worth today if we were to do that. This might seem like daunting and difficult. However, given the structure here, particularly columns A through E of our data, it is easier to calculate this than you might think. All we need to do really is add one or two helper columns. My first helper column is going to be a binary column on whether or not we're going to buy a stock. Now, the first day in which we buy something is going to be January 1st, 2002. So I'm actually going to navigate there quite quickly. I'm going to use my filter and I'm going to go down. I'll just select 2002. And as a placeholder, I'm just going to type a couple of X's here next to January 2nd, 2002, which will be the first day in January. Now I'm going to clear my filter. So I know I'm only buying stocks potentially on this day or later. I'm only going to be buying stocks in January, the first day in January, every single year. So what I can do is actually use my year column to my advantage. I'm going to do my January 2nd, 2002 year minus my December 31st, 2001 year, and that will produce a value of 1. And if I copy and paste this down, I've actually created a binary column where it's going to be 0 for every single day of the year except for 1, the first day of the year. Just to examine that, let's turn off our filters and reapply our filters to capture this newly created by column. If I filter to show me only the ones, I will have 1 day per year. It will be the very first day in January every single year. So I have January 2nd, 2002, January 2nd, 2003, January 2nd, 2004, January 3rd, 2005, and so on, all the way until I get to January 2nd, 2025. Now I said January 1st. However, as you know, January 1st is a holiday. So what we have here is identified the first trading day of the year. And because there's only 2 possible values that can exist in this column, a 0 or a 1, I'm going to add another column. It's going to be number of shares purchased. And I'll wrap my text here, center these, and navigate back to January 1st, 2002. And again, only 2 things can exist in column F, this by column. It's either a 1 or a 0. If it's a 1, I'm going to be purchasing $5,000 worth of shares. So my logical test is going to be, if this equals 1, then I'm going to do $5,000 divided by the stock price on that day. If it doesn't equal a 1, it equals a 0. A 0 equals, well, in this column, a 0 equals I'm not buying shares. So I'm going to have 0 shares purchased. Ignoring rounding issues and any transaction prices, on this day, $5,000 would have bought $14,000 or produced the equivalent of 14,246 shares in today's shares. Because this, we're using the adjusted close, so this retroactively is adjusted to reflect stock splits and so on. So I can copy and paste this formula down, and it will produce a 0 everywhere except when a 1 exists in the adjacent column, which will be the first day in January of the following year. Now here's where things get really interesting. I'm going to sum together this column. This column now represents all of the shares that I theoretically would have purchased had I gone down, or had I purchased 5,000 each January since 2002. So what would my portfolio be worth today? Well, let's see. I would have the 67,000 shares. Using the adjusted close for the last day of data that we have, we calculated this in Q1, which is actually just this 243.86 on January 3rd. This is the most recent day of data we have. This portfolio would be worth let's see here, drum roll, $16,521,000. Wow. This is even more staggering given that this is only a 24-year period. If I sum this column, I'm summing together all of the ones. All of the ones, again, are just the Januaries, the first January of every year. So I have from 2002 to 2025, I have 24 years worth of purchases. Now remember, number of years is 24. Purchased per year is 5,000. Total purchased is 24 times 5,000, which is $120,000. So $120,000 invested into Apple over a 24-year period using a dollar cost averaging strategy would now be worth $16.5 million. Absolutely phenomenal. So that's Q12, part A and B. For completeness here, part B is just the 16 million divided by or minus the 120,000. But I'll omit that here. So there we have it. all 12 questions. Now I'll delete this here and maybe add in some borders to more clearly group together the questions associated, or the questions and answers. And this down here is Q12. Thank you for hanging in there with me. I hope you found this useful. If you have any questions, I'm always there. Take care, everyone.